Hey everyone, Couch Investor back to another earnings video for today. So, Fiverr reported earnings before the market opens. At the time of making this video, the stock is up around 5% or so. Again, a lot of things can change during the day. Now, they reported a double beat, but as you know, they are focusing a lot on the bottom line, so the top line revenue growth is not really growing that much. So, can you call this a growth stock today? Not really. But the bottom line is improving by the quarter, which is something that they mentioned already a couple of quarters ago. In a tough macroeconomic environment, they are trying to make this business extremely resilient, which is exactly what has been happening. Now, what do I expect going forward? I do expect more acceleration in growth in the second half of the year, especially leaving 2023 going into 2024, as, well, I think the whole market expects rate cuts, at least inflation interest rates to peak, and then going into 24, more rate cuts will happen, which should help a company like Fiverr. Now, right now, you aren't even paying that much for this company. It's a $1 billion market cap, next 12 months PE 17.9 times. And if you look at the analyst estimates for EPS growth in fiscal year 2023, 114% there. If you look at 2024, 31%, and fiscal year 2025, 40% growth for EPS. So really from a PE standpoint, let's say, for this company, it's not that expensive. And yes, analysts are expecting reacceleration in sales growth in fiscal year 2024 and 2025. And so let's look at the highlights. So first up, let's talk about these two things here. Introducing Fiverr Business Solutions. Fiverr accelerated its upmarket strategy with the recent launch of Fiverr Business Solutions, a suite of products offering which allows larger companies to access and work with freelancers across multiple use cases and engagement scenarios. This launch also includes the all-new Fiverr Pro, our premium marketplace offering. Now, of course, if they want to generate more revenue, if they want to become more profitable, going up market is the logical move to make. Now, doing so means you're less likely to go after the one-time buyer, the one-time spender, the less quality users. And so, yes, you might see the user base not grow as fast as we used to. Then next up is introducing Fiverr Neo, and this is something I saw coming miles away. Every company is doing this. So they rolled out Fiverr Neo, our groundbreaking matching tool, basically the Tinder for Fiverr. Our groundbreaking matching tool leveraging the latest neural networks technologies and Fiverr's data assets. Fiverr Neo provides an all-new experience for customers to express their needs and be matched with the right talent. I mean, it makes sense to introduce something like this, right? We've talked about this with Shopify, with the Copilot. You go, you ask for help. Are you looking for something? The chat GPT type of thing at Shopify as well. What are you looking for? I'm looking for an orange shirt with some designed texture on it, whatever. And it finds you the right stuff. Same thing here. This is my budget. I'm looking for a website designer. Can you help me out? And then it picks out the right Fiverr seller. I mean, no brainer, right? And so the key results: revenue grew 5.1% year over year to $89.4 million. Active buyers remained flat, 4.2 million. And I think last quarter was 4.3, so there is a little decrease here. Spend per buyer up 2% year over year to $265. Take rate still extremely high, 30.7%, a 90 basis points improvement year over year. Gross margin 82.5% GAAP, 84.2% non-GAAP, and then yes, there is GAAP net income of $200,000, adjusted EBITDA of $15.3 million, and adjusted EBITDA margin of 17.1%. Again, as you see, profitability of the business becomes much better here, and this is probably why the market is happy with these results. With regards to guidance, they yet again improved it a little bit, not with regards to revenue, but with regards to adjusted EBITDA. If you look at the full year guidance for adjusted EBITDA, between 56 and 60 million. Previously, that was between 48 and 56 million. Now, as for revenue for Q3, they expect to grow between 8 to 12% year over year, with adjusted EBITDA coming in between $14.5 and $16.5 million. So basically staying flat at the midpoint quarter over quarter. For the full year, they expect revenue to grow between 6 to 8% year over year. Now, of course, with the rise of generative AI, with the trend, the hype going on, by the way, the trend is dying down quite quickly across the board, right? The amount of people using ChatGPT today is down. Of course, you might say, yeah, but that's because students aren't at school anymore, so the usage is down. Yeah, fine. But overall, the nature of people, you rather go and spend a little money and ask a professional to do the work correctly than you start wasting your time and doing things the wrong way. And this is why I think Fiverr will only benefit from this. These are just new categories that are added to their catalog, new ways to monetize these types of topics. And so let's continue here. As we accelerated our pace in upmarket investment during the quarter, we've also shifted more acquisition budgets towards higher value buyers and reduced investments in certain channels that mostly attracted low-value customers, as we mentioned at the start of this video. We expect the strategic decision will impact the number of new buyers joining our platform this quarter and in turn the overall active buyer number in the near term, but will ultimately drive a better buyer mix and improve spend per buyer, lifetime value, and retention, short-term pain, long-term gains. Now, with regards to the cohorts, for this quarter, they remain the same. The time to return on investment is still at 0.9 times, implying the payback period of their performance marketing spend remained at a little over a quarter. Now, they do say that non-GAAP sales and marketing expense as a percentage of revenue was 39.1%, improving from 45.8% in the same quarter last year and representing their most efficient quarter for the company. By the way, if we zoom in a bit, we can see that Q2 is already big better than Q1. Then Q1 was starting slowly, but is already also better than Q4 2022. They continue by saying that cohorts continue to perform in line with their expectations. The percentage of core marketplace revenue coming from the repeat buyers continued to climb, reaching 65% for the last 12 months compared to 64% last quarter. Again, very, very good news. Now, before I continue, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. Would really appreciate that. We're trying to reach 30,000 subscribers by the end of the year, and we're covering a lot of companies during this earnings season. I really, really appreciate all your support you're giving me during the last couple of weeks, so thank you very much. Now, continuing here, expanding the service catalog. As I mentioned before, the catalog continues to expand. In Q2 2023, they added more than 20 new categories, with the total number of categories now approaching 700. They've also seen the need for digital transformation continue for businesses as they witness strong momentum in areas related to e-commerce, mobile app development, short-form video content, website building, and 3D rendering. For example, one of their largest transactions in Q2 was a 20,000 plus order where a B2B wellness company needed a customized app for educational and coaching services. Now imagine if they continue upmarket and we see more and more of those orders, well, we will see an accelerated growth at the top and probably bottom line as well. Then continue here with regards to Fiverr Neo, what I call the matchmaking tool. They say here, we believe Fiverr Neo has the potential to become your personal recruiter who is as good as your human recruiter, but infinitely patient, infinitely compassionate, infinitely knowledgeable, infinitely helpful, to borrow Marc Andreessen's words. I agree. As for international expansion, so they continue to increase their international expansion efforts in the UK, Germany, and France, which are important growth markets. They have expanded their international marketing efforts with the launch of TV campaigns with local creatives in the UK and Germany. I think there's still a long, long way to go when it comes to the international markets and even in the United States. I mean, still the majority of businesses today, especially if you look at retail, still offline. So overall, again, solid execution for Fiverr. Of course, if you're looking for these high growth numbers, you're not going to get it from Fiverr anytime soon, in my opinion. Of course, I would love to see accelerated growth in the second half of the year going into 2024. But for now, I have to be happy with the bottom line becoming better and better. I surely hope to see results from going up market, because I do think that that's going to be one of the main drivers to grow this business from a just $1 billion company to a $10-20 billion company in the future, if not more. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.